We bring a parallel all the way up to that previous all-time high and look at what we get. We get the high here, and then we had that base of consolidation, and look at what we kissed today. And so based on this tells me that at least we should go into what we would call a consolidation period or digestion period, which generally is a small pullback on gold as it kind of gets ready for its next move. So I still think there's upside on gold into next year and beyond, probably as high as $6,000 in this bull run. But you just have to be cognizant that charts very rarely go straight up. And if they do go straight up, they pull back harder. So, here in gold's situation, gold's underlying strength remains supported by falling treasury yields and cautious commentary from Federal Reserve Chair Jerome Powell. On Tuesday, Powell warned of two-sided risks facing the US economy: rising inflation pressures versus softening labor market conditions, stating that there is no risk-free path. Market analysts are observing that gold and silver are currently in a robust acceleration phase of their bull runs, a period characterized by rapidly escalating prices and heightened investor interest. This significant shift indicates strong upward momentum for precious metals, suggesting a fundamental revaluation of their role in the global financial system. Gold's rally has gone nearly vertical, and chief market strategist Gareth Soloway says that's an obvious technical signal that a short-term pullback is healthy and expected. He anticipates gold will consolidate and may retest towards the next leg higher with a long-term cycle target of up to $6,000. Soloway projects the price will chop sideways for the rest of the quarter before confirming the strength of this ongoing bull run. Regarding gold miners, Gareth Soloway emphasizes the as above so below principle, noting that GDX has already reached its near-term upside target. Companies like Barrick Gold Corporation, Newmont Corporation, and Pan American Silver could see substantial benefits from higher metal prices, leading to increased profitability, expanded exploration budgets, and enhanced shareholder returns. Turning to silver, he acknowledges his earlier skepticism due to its heavy industrial use, but notes that gold's breakout has decisively pulled silver higher. Although he isn't calling for triple-digit silver yet, he emphasizes that the long-term trajectory remains bullish and the $60 target is realistic in this cycle. Before we dive into Gareth Soloway's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it. Per the charts, we are getting to a point where we're getting extended, and I'll bring up my charts to show here. So number one, one of the last times we talked was right around this all-time high here. And we did see from that point what's called bullish consolidation. And essentially, if we connect these highs and these lows, you get what's called a bullish wedge. And so this was telling us that price had run so much from December of 2024 into April 2025 that it needed to digest the move to gain strength for its next breakout. And sure enough, it broke out recently. And look at what it's done since it broke out. I mean, just straight up vertical move. If you've been a gold bug for a long time, you know that gold tends to not move so vertically. So, in general, it's actually healthy to see it pull back a little bit. And so one of the things I discovered on the charts, and this is really kind of cool, I use parallels to give myself resistance levels. And so what I did here is take the low from 2024 basically, when the bull breakout began. If we zoom back out, you can see that in 2021, we went sideways. We kept on hammering on this $2,000 level over and over again, hammering. And then finally in 2024, we broke out. So let's use that low and connect it through the lowest point, which is right down here, right here. All right. And that's in December of 2024. We bring a parallel all the way up to that previous all-time high. And look at what we get. We get the high here, and then we had that base of consolidation, and look at what we kissed today. And so based on this tells me that at least we should go into what we would call a consolidation period or digestion period, which generally is a small pullback on gold as it kind of gets ready for its next move. So I still think there's upside on gold into next year and beyond, probably as high as $6,000 in this bull run. But you just have to be cognizant that charts very rarely go straight up. And if they do go straight up, they pull back harder. So here in gold situation, let's look for a pullback maybe as low as 3,500. And then the next leg to the upside can start. So based on this hit on this trend line, what we're likely to see is that gold will now go into a period of sideways chop. Probably pretty similar to what we saw over here, which again, if you're a long-term bull, you don't mind this because it's just digestion. We all like to be paid out fast if we're long gold, but it's healthier to see these kind of sol consolidation periods. And this one lasted from April all the way until basically August, before the big move up. And so I think it's very possible we could see in the next quarter something very, very similar. And what I like to do is, if we just extend this out here and bring this up a little further to look out into the future, I would generally look for sideways chop that could take us back to the previous high. So, in technical analysis, what's so fascinating is that once we break out above a previous all-time high, like from April, there's a tendency to want to come back to home base. And home base is the previous high, where you saw a lot of consolidation. And so, in reality, it would make a lot of sense for gold to just pull back to this level here, this 3,500 level, which should be really, really good support. And in all fairness, it could take up to 2 to 3 months. So maybe by end of year, we're still kind of struggling here. But then the positive is it's gathered its strength and can make its next push. And by that point, my guess is this UPS sloping parallel gets closer and closer to 4,000. And I think the next target then is $4,000 an ounce on gold. So when you go to new all-time highs, you're essentially in uncharted territory. It does make it harder to find levels, but that's where you start breaking in these ups sloping trends, right? So on gold, for instance, we have this longer term parallel, which allows us to bring this trend line up. And it actually gave us the recent high that we just kind of kissed today on gold. So you don't have as much at your disposal because you don't have as much history in this area. But again, you still can find something. And even when you're in uncharted territory, there's going to be a pivot point where there's a certain amount of buyers that bought and they're happy enough with their gains and they're going to sell into that. And so you will get a pullback. It's up to us as technicians to figure out at new all-time highs, where is that going to be? And again, things like the parallel, the ups sloping or ascending parallel is a great tool for that. Also, fib extensions can work very, very well. Yeah. And silver has broken out. And so it did go into some resistance. I'll discuss that. But until it broke out, I was a skeptic just because, again, if the economy is weakening and it's partially an industrial metal, those are all things. But ultimately when gold, think about this. Gold gets so extended away from silver that eventually it pulls silver behind it. And I think that's really what we've seen here lately. But one of the things I love to show here is that you had this kind of up-sloping trend line here. And you can see that essentially every time we would hit this line, and you can see it right here. I'm going to use a little directional signal. So here and right here and all along this area, we just kept on getting rejected. Finally, they got us above, and that's where we've gotten this beautiful run. So now we did come into a resistance at $44 per ounce. The resistance here comes from a pivot high in 2011 right here. And then this was the second highest high, right? And so this was in August of 2011. So just on a technical analysis basis, this gives us a point where after this really good silver run, it should take a breather. But I actually am bullish now on silver after we take that breather. I do think it's destined to get back to that $50 level, which was the high in 2011. Technically, just below 50, and I actually think eventually it's going to go higher than 50. But in the meantime, look for consolidation, small pullback here at 44, and then eventually a breakout in the next couple months towards that $50 level on silver. I'm not 444, and then again, this is the next 6 to 12 months. So keep in mind if we talk about where this is in 5 or 10 years, that's a different story, but just in, let's say, 6 to 12 months. What I've done here is basically say, okay, well, if we have, let's use our parallel. Again, just like it just predicted that gold move. If we zoom out to our monthly chart and we go back to the low of the last bull run, which started basically in 2001, 2002, and then topped out in 2011, and then to this low here, right through these levels. And let's draw that trend line in, all right? So we can see here that essentially we have a point where every pullback kind of chops around this one outlier right here. Where we dipped below, that was the COVID collapse. And so I refer to that one as an outlier because it was just all out panic. We saw oil at that time, oil actually went negative. The current month contract was like negative $40. They were actually paying you to buy oil at that point or to take oil. Now granted, you had to figure out where to store thousands of barrels of oil because if you were going to buy it, that's what you had to do. But the point